I'm going to walk you through exactly how I mark this trade with structure step by step. Watch carefully, you'll see how clean and simple this process really is. We're going to look at the US dollar CAD. I'm going to show you a trade that I caught on a 30-minute time frame. I'm going to work this down from a weekly time frame all the way down to 30-minute entry. If you've ever wanted to read structure with complete clarity, this is the same method we use in my 90-day program. Let's go through it step by step. To start with, we're going to look at this highest point here in the market as our last potential weekly break of structure. So once we identify this, we can mark this off as a weekly break of structure. From that point, we look back. Let's zoom into those candles. Now, hopefully you've seen the previous video went through step by step, where we're actually showcasing how you mark up the chart using this type of strategy with those candlesticks. What we're looking for is when we look back is the last time we see a candle closing down, and that is actually on this candle here. So once we see this breakout, we look back, that's the close down. This becomes the valid low for a weekly strong low in the market. So this is going to be marked off as a weekly strong low. And then we look for the same process. Once we see the breakout, we're looking for the close down. That happens on this candle, and that becomes our current weekly week high in the market. So now we have the current trading range. We can now also add into this is an area of supply and demand. I'm actually going to draw these out today so you can see how I use the supply and demand aspect to help me identify these areas to trade from. So this would be my area of weekly demand I would apply for this reversal area. So let's mark it off as a weekly demand zone. Now you can see that the market has made this break of structure. We've had this pullback. Now what we do have here is some internal structure as we pull back into this weekly area. So what we've actually got is from this high here is actually an area of supply on an internal structure supply. But I'm not going to go into too much depth into understanding internal structure and swing structure here and even fractal structure. If you want to take that to the next step, you can learn much more of that inside the 90-day profit trading system. So when we look at this reversal out, and let me just get a arrow here. Once we see this candle here, we sweep this low and we have a reversal up, a pullback, higher low, continuation, and we start to move higher. What we can identify here is using multiple time frames, and this is the key part to this. We can actually come down. Let me just go to a replay mode to make this even easier for you to understand. We can now go down to a daily time frame, and what we're looking for is the use of multiple time frames to show us that this market is indeed shifting out of this weekly area of demand. Now what we can look for is the same process. Let's go in close to these candles so this is easy for you to see. When we're in that downtrend, we're looking for the close up. So we have a close up here to show us a valid low. That means I can mark this off as a valid low for a break of structure. I'm going to mark this through so you can see this step by step. So we have a break to downside here. Straight after that, we get another valid close up. That means I can mark this out again as another valid break of structure. It's that easy to understand this structure. So at this point, what we now have after this breakout, we look back for the valid close up and it remains that one. And this would have been a valid high up here. This is currently a valid high, but now we've shifted bullish. We've actually gone bullish here and we've started to run higher. So what this will create is an area of demand down here where we could come back into the area of daily demand. Now, I'm not saying that's where we're definitely going to come back into, but it's a potential area because we have a leftover imbalance, and it's understanding imbalances with supply and demand, which again is something you can learn inside that 90-day profit trading system and within that community. So what we're looking at, let's go forward a candle with candle now. So we pushed up higher and we started to get a pullback. What do we have? Well, we have this low being swept at the moment on this daily time frame. The easiest way to understand what's going on here is we want to go down to lower time frame to see what's happening. So let's go down to a 4-hour time frame now. This is where everything will start to link together with the multiple time frames. And this is where you're going to start having those aha moments understanding price. So we're going to map it from here. And we'll walk our way through this structure. So we have a break to downside. We have a valid pullback. We have another break of structure to downside. And this is all you're going to have to do with your structures. We get another break here to the upside, and the continuation is now bullish. Now from this point, This is where we continue up. We have another valid pullback. We continue bullish. A new break of structure again to the upside until we see eventually the break of this daily high. So that's our daily reversal point. We're now broken out, another pullback. And again, let me just show you this. We have another break of structure here to the upside. So reading this step by step is the key. So once we have this, we have a low here we can mark. This is our valid 4-hour strong low. We can also mark out this is a valid week high. And what we're looking for really is the market to make this sweep that we've just seen at this low. And you're looking for the market from this point to continue up to run this high in the market. So a continuation. But as this is a daily break here as well, there is also the chance that we can reverse bearish and then we start to pull back to this daily demand. But this is a liquidity sweep in the market. It's something completely different. Let me just go forward and we'll play a bit of this price action and see what's happening. So the market pushes away after the sweep, and now you can see we've actually pushed lower and we shifted back to the downside. So now we can actually remove this and we have a shift on this 4-hour move. Now we've got a bearish shift. And what we can also do is move this high to this high as a valid strong high in the market on a 4-hour time frame. So we have a bearish bias. Now when we go back up to our daily, you're going to notice that now we've seen that big drop and that pullback on the daily, which is what we're looking for. This creates now a valid high on the daily. That's what we're looking for. So now we actually have our daily structure with our low down here, a strong low in the market. And let me just bring this demand up. We have our area of demand, potentially looking for price to come back into for a buy on a daily, and then looking for continuation to run for this daily high. Now, this isn't actually the trade I'm taking. I'll go through the actual trade in a moment. I was taken on a 30-minute, but I just wanted you to understand how you can read structure here. Let's go forward with a candle by candle here. Okay, so the market pushes into this area of demand, and now we expect to see a push up to run for that high. That's understanding multiple time frames. We can drop back down to our 4-hour structure here. What do we see? We see the market pulling back up, sweeping this high, taking liquidity, and then we run back down and we run this low. So let me just grab a line again here. So we've taken out this low, and a continuation is bearish with that 4-hour structure. Now we're creating the pullback. What we can now actually mark off is a new low down here on a 4-hour structure. This is going to be a week low on a 4-hour. And this being my current strong highs up here. So again, you can see how the market moves in swings and how we can see that this is actually a larger swing here on a daily, pulling back into that area of demand on a daily. And we're looking for continuation back up for that daily high. That's what we're looking for there with price. So just run this forward a bit. Now we come back down again and we break structure again. We go deeper into this demand. And we mark this across, a new break of structure back into demand. And all this time we're waiting for this to shift back bullish in the direction. Okay, so just making sure this is a valid high. It's going to be this high. We're waiting for the shift and to go into our direction so we can then start buying out of this area of demand. At the moment, we haven't done that. We're still bearish on the 4-hour time frame. Now we create another quick break of structure. Hope you're starting to follow along with how this works. So we'll mark this off as the next 4-hour break of structure. Our new high is here, and that's where we're looking for a reversal. So from this point, let's see if we can reverse bullish from here. Let's go forward with price. For some reason we're not moving. Let's try again. Okay, so we have. So now you can see we've shifted bullish. We came into this area of the daily area of demand. What's actually happening is price coming into this candlestick here. Mark this out. And we've held at this 4-hour zone of demand nested within the daily. And that's how you can start to understand this when you go through the 90-day profit trading system and understand the use of supply and demand. So now we create that break of structure here to the upside. What we've got, as soon as we see this breakout, we've got a valid low down here, which now becomes what we class as a strong low in the market. So we've also got right here is a valid break of structure. So now we're bullish again on a 4-hour time frame, and this signals to me that we're going to continue up, eventually continue up to run the daily week hikes. We've pulled back into that area, reversed out, and now we're looking for it to stay bullish to run for that high. So now we've got a valid high up here as a week high as well on a 4-hour. So we mark it out, and we've got that current swing move to the upside. So you can look for a pullback now into this area. Let's get rid of this zone. And we do have down here, we have an area of demand here on a 4-hour time frame. We also have an area here as well, and we have a low that can be swept. So let's go back to the daily time frame and see what's happening. We've dropped into that daily area. We shifted out bullish on the daily. We've pulled back into new daily demand. Typical reversal out of a higher time frame area of zone. Now we're starting to push back bullish again, looking for continuation to run high. Now, the first thing we're going to see what happens here is this high is going to be run. So let me mark this off on this time frame only. I'm just going to show you. So we're looking for this high to be run. It's where liquidity is going to sit. We're just looking for price to pull back, continue up to run that high. Back on the 4-hour time frame. Okay, so we can look for price to pull back for potential entry. We're also going to have this low. The market may well sweep this low and run higher from there. So you can see we've come back up. We've swept the high. If we close through, which we haven't done quite yet, let's go through a candle by candle. So we do. Now we close through and we've got a continuation of structure. So we didn't even need to come back and sweep that low that I marked. Now this is not a trade I could have taken here based on this time frame. So as the market continues to push up, we can now move this low. Let's get rid of this zone. We can move this low up to here, where we see the closing down. We don't need this level here. And we continue forward with price again. So now what's happening is we're pulling back. Where are we running to? Well, we've created this high. So I'm going to mark off this low, where I want to see a run through. Mark off this is the current week high, and we've got a strong low. That means we've got a potential area down here that we can mark out as an area of demand. And the market still want to shift bearish here, but we go with the current flow. And if we now go down to the next time frame of choice here is a 30-minute, we've now got to use the 30-minute as well here to start looking for our entry point. So now we've got our 4-hour structure, we've got our daily structure. Now we're going to use that area on a 30-minute. Now we don't need to worry too much about our weekly because we're now coming out of the weekly demand. There is my basically, this is my daily structure. I'm pulling back. We're seeing the shift out on that daily area of demand with a 4-hour structure. And now we're going to start applying is our 30-minute structure. And we're going to do this. We'll do this from the current move. So from this high, we break out right there on 30-minute. This becomes a new 30-minute level to be broken. So we mark it out as a 30-minute break of structure. Once we do that, we have a valid low. Let me just see if there's a valid low there. And I do believe there is. So that means this becomes a valid low down here. So 30-minute structure now shifts back bearish. Again, if you're not sure on how I'm marking these up, watch the previous video. It's going to be at the end of this video, and I go through step by step exactly how you can mark up this structure. And now we're going to look at the next breakout, which is this one. We have a valid pullback. You have another break of structure bearish. Now, while all this is happening, what's happening is this is pulling back in towards this area here of 4-hour demand. We got marked out. Now, we failed to drop into that demand here. Notice how we failed to drop into it, and we still saw the market want to run higher from here. And what that's doing is bringing in those buyers. We run back up. We failed to take out this weak high on a 4-hour, and instantly we saw the shift back bearish. Now this is bringing in those buyers too soon, just to run some liquidity at these highs. So there's a sweep in the market. We mark it off as a 30-minute sweep. So we run those highs, and now we're running back into the area of demand. What we want to see was this low here getting run. We've run that low. So now we've got this low being taken. We're currently bearish in that structure. Let's go to 4-hour time frame so you can see how everything aligns. So now pulling back into this area. Now we can still run deeper because we've got this leftover area down here and we've got this previous demand we never got tested into here in the market. So yeah, we can always go deeper from this point. Let's go back to 30 minute. I'm going to follow this price action from this 30 minute now. So you can see how now an instant push up out of that zone. Why did that zone work? We're going to the 4-hour quickly. There's the zone we marked on the 4-hour. We ran that low that I'd marked and straight away we pushed through and closed back down. Now at the moment we haven't closed through that high, but it is showing you exactly how the market moves. So now we've created a new break of structure again and we're now bullish. This is a key thing. You start to follow price. Now I know this is going for some time, but I want to walk through how I look at these structures in the market, how I follow the price action. Because until you really get and understand this, you're going to struggle. So if we go back now to 4-hour, the 4-hour, we'll go just quickly on this. You'll see that we pull back in again and we're moving sideways and eventually we break back up. So you can see what we continue to hold there. Once we've seen this bounce from this area, we're not interested until we see the close of the 4-hour. So everything on the 30 minute is a no interest to me now. Now we've broken out. What that gives me now on a 4-hour, and let me show you, we've got a new break of structure right here on a 4-hour. And that's why it's always higher time frame first, then your lower time frame. After this breakout point, we are potentially now, we haven't closed down yet, but it could be a new low here in the market. And then this would be my current low. So this would become an area of potential demand if we see a pullback first. This got swept. And what we can do is go forward with price again here. And you see that we sweep the high first, bringing in those buys, then we pull back into the demand and we push back out. We're expecting price to stay bullish here until we run this daily. This is the daily high that at that point I said, once we came out of this area of demand, I want to see it running that daily high. Let's go forward through candles again. So we've gone deeper now, you see, and we took out this low. Potentially we could shift back bearish there. So you can see this is our breakout point. Again, this becomes a new high. And this was the break of structure. So now we're just looking for price to continue up to that high or shift back bearish. And we shifted back bearish. So at this point in the market, we've now gone back bearish with this 4-hour structure. That means we failed to run that daily high as expected. And we'd expect to see this daily high being run, okay, here before we saw the pullback. So now we have to reset and we look at everything again. Let's go back. We'll just add this to a strong high. We'll go to the daily time frame here. And you can see what's happened is the market had to sweep. Remember, I marked out this high up here before price even got here. I marked it out to show you. Now we can see why price moved up and we took that high. And that's where you could be capturing your trades to this high. Not expecting to run this high, but taking this high. This high held, we didn't close through, and then we ran back down. That is understanding when you're looking at your markets like this. Multiple time frames, these levels will work over and over. Go back into that nested area. So now we go back to the 4-hour time frame and we'll continue with some candles. So we created our week low right here in the market. So as a week low, there's my current move on the 4-hour. We're bearish now again. But we came back into this previous area to mark it out where we had this area here, a leftover area of imbalance. We had to fill that and now we've held and we've continued to push higher. That's what I was looking for. Was always looking. I marked it off and said to you, we could go all the way back down to here. And that's what we do. So now we're basically in a bearish bias, looking for continuation back bullish. We're still looking for that daily high to be run. So let's continue with that price. Now we run through, straight through that level and we shift back bullish. That now puts me back on for buys. I'm now happy to look to buy this market again. we've actually created another quick breakout. Mark this off as a break of structure as well. And at that point, our low was here. Now our low is here. So we could see a quick shift back bearish, because we do have, from this point, we have a leftover area that I can mark out here that we could come back to forward. So what happens is the market continues to run bullish. We have no pullback at this stage. Let me just, except for that level I got marked, let's just have a look and just double check that is. Yeah, so that's the next break of structure right there. And that's where we see the continuation. And we're looking for the close down to create a valid high. We haven't got one yet. There's our valid low. And again, we're just looking for that continuation to run that high to show us the new break of structure. And there we have it. So you can see how we've gone through the full cycle of reading that price action there, where we see the break of structure, the reversal on the daily, the 4 hour, and eventually you'd find 30-minute there as well. So that's going through reading that structure. Now let's just basically look at, and we're going to fast forward this bit now to the previous trade that I took. So I'm just going to get rid of this mode. So now you can see the trade I've actually taken it. So this was just really walking through, teaching you the way I look at the structure. Now we're going to walk through the actual trade. So let me just remove all of this on this daily time frame. We don't need this here now. And remove all this, and I'll walk you through this step by step. So we had the break of structure here that we already saw, that first break we went through just now. Since then, we had another break of structure now here. And this becomes our next break of structure. For a week high is going to be here in the market. So it's my daily week high, and this is my class my daily strong low. So when I look at this as an area, I have an area of potential demand down here on a daily. Price from here could continue all the way back down to here for buy again from this point. Now I also have, which I'm not going to go into detail right now, but I'm going to mark it off for you, a level here in the market where price was holding at this area of bullish imbalance. Above this, I also have this level I can mark where I was looking for price to pull back to this level to either look for a continuation, and we could see a continuation most probably towards this high now after we close back through, understanding imbalance in the market. But what I'm actually looking for was this area. We held at this point. Now this one goes down to my 4 hour time frame. And again, we're going to just, let's just take this one away. We'll remove these levels at the moment. And we'll go forward with this price. So we can see we had another pullback here. New break of structure. Now we can start to see what's happening. We'll get rid of this level as well. For now, we don't need it. But we can identify this is now a break back to downside. So there's a shift in structure on that 4 hour. Now we create the next pullback, next shift bearish. Now when price came into this level that I had previously marked, this creates this current low in the market. So this would have been a current week low, and this would have been my strong high at that point. Now the market has basically come down, held at that area I had marked on the daily, and this is where I'm going to start looking at my lower time frames here. We pull back up. We failed basically to run shift structure again bullish, but what we actually did do here is we held at this area of supply on a 4 hour. Now we are potentially bearish at this point. We sweep this high, and from that point, I know that the market is going to go for this low. And that's where ahead of time, understanding candlesticks, after this sweep, close down, that is where price has to go. And it does. It takes the liquidity out low, and then we close back as a bullish candle. So once I've seen this, my view now is changed. I'm going to go into replay mode quickly so you can see the step by step what I'm taking here. So on a daily time frame, we are bearish on a swing pullback again, just like we saw before. And the idea is that we want to see price really pulling back into the area down here for potential move higher. Now, something we look at is our premium discount area. And I can tell you that we've come back to our discount area. So a bounce from here is very likely, and we can move higher from there. That's what we saw as well with that level I marked on the daily with area of imbalance. As soon as I've seen this sweep, I'm expecting we could go higher. And that means from that point, this could go all the way back up to run this high here again, and eventually take out that 4-hour high as well, a strong high. Now to follow this, we're already bullish on the daily. I'm going down to the 30-minute here, and this is where I'll start applying my 30-minute structure. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. So we've got a simple break here to the downside on 30-minute. We have a pullback. This creates a new low. We have another break of structure to the downside. So now we're bearish bias. We're dropping basically the market here. Came back into the area here of supply on a 30-minute. We continue lower. New break of structure. And this would become the new current high. So I'm going to mark it out as a level at the moment. So I'm looking for, from this point in time, remember, we've just seen the sweep of this low on a 4-hour time frame taking liquidity. If I was to see now a shift bullish with structure, I can look for continuation to run this high for liquidity and to take out my strong high. Now, it's riskier trade this way because I'm going against the 4-hour. But it's also a good trade after seeing a sweep like this, taking liquidity, looking for a shift in structure. Let's just see what happens. So the market shifts. Let me go back on a little bit too far. Let me take that off. I wanted to show you where we see the breakout point. So now we've got a breakout point on this chart. This is where I'm looking for a long now. I'm looking at price. We break out with this candle. Where's my new low? This is my new low right here in the market. So that's my strong low in the market. Now, normally I'll be looking for price to come back into this area here. What I've already seen is the markets came in with this candle before the breakout occurred and filled it. So now we have this candle. And I'm now looking, as soon as I've seen this breakout on this candle here, is for a buy trade to pull straight back in. So that's what happens on the very next candle. And my target is going to be looking to first take some profit at this level I got marked on the 4-hour for a potential liquidity run, and then the run of that 4-hour high. Now, if I go back to the 30-minute, and we're going to run this now, you can see what happens. So we hold at this area for a few candles. We make a sweep. What I mean by sweep, we sweep this low here, take some liquidity, and now we run to the upside. Now, we never created a pullback here, so we're still one move up. So what I mean is, on this point in time, we're still one move to the upside. And we're looking for this to run continue to the upside. And instantly, we see a run. We take first target and full second target. Then we get a pullback, and now we've seen another continuation with structure to the upside on another 30-minute break. So that is how you can read this with your structure. Back on the 4-hour time frame, this is where we see a continuation and a reversal now of that 4-hour structure once again. But the idea is reading your time frames. We start with the weekly time frame. We're seeing the market pushing out of the weekly. We go down to the daily. We see the shift. We get a second break of structure. So there's my first. The pullback was a better pullback into here demand. There's my second break of structure. We came back to this area. Now we're making a pullback. We had some levels here. I'm not going to go through that again. If you want to look at those levels, you can look back. That is where we're looking for the entry. The 4-hour time frame, we saw the move down. We saw the sweep of this low after we swept this high. Because we see the reversal candle occurring, this bullish candle, and then followed by that on the 30-minute time frame was a shift in structure that suggested we run for this high. And that's when we saw the pullback continuation. So that's a step-by-step approach of how I use market structure to map my areas to take my trades. Now, to watch this step-by-step exactly how to map and mark the structure itself, check out this video right now. It's going to walk you through it step by step.